Hi guys, welcome to another video episode on AB Crypto Talk. This particular video, I want to talk about DCA. All right, so before we go, if you are just watching my very first video, I say welcome, and if you have been watching my video, I say thank you and welcome back. So please, if you have not subscribed to this particular channel, please do, so you don't get to miss my next videos. All right, so now back to DCA. First, if you are a new crypto investor or trader, let's say you don't know the right time to buy, you are scared of buying at the top so that the market doesn't dump on you, or let's say you are afraid of buying the dip so that it doesn't get deeper. I will tell you this: the smartest or the safest um thing for you to do is DCA. Okay, so do not be confused. We have a few slides to cover, so I'll be quick about it. So our area of focus is: what is DCA? Who should DCA? The benefits of using DCA. And lastly, we will talk about example of DCA. That I will show you how it actually works. All right, so now what is DCA? Okay, DCA means dollar cost averaging. So it's a strategy that aims to reduce the impact of volatility on the purchase of crypto assets. It involves buying equal dollar amount of a particular crypto at regular interval. So what this is saying is it aims to reduce the volatility that is associated with the crypto industry. All right, so DCA here doesn't mean it only applied to the crypto market. You can use it in any other financial market. The people that are trading stock, they know how to DCA. Okay, they know how to use this stuff. Okay, so these yeah, it says it involves buying equal dollar amount of a particular crypto at regular intervals. So what this means is you can buy at a set time. Okay, so this interval could be daily, could be weekly, bi-weekly, monthly, without considering the price action. So I will need to explain this last statement here. It means let's say you want to buy a coin. You say you want to do this daily. You can say each day I'm going to be using um $100 to buy this particular token. Let's say the one you want to buy at the one, and the price of the token it's $10. Okay, so you are buying with $100. You are not considering the price action, the price. You are not considering the price. Okay, so the two you want to buy, and the price is at let's say the price is at $15. You are still going to buy with that same $100. The price of the particular token or the coin is not your concern. Okay, so the theory, let's say you want to buy the theory and the price it's at $9, okay, per token, you still have to buy with that same $100. Okay, so that is what this thing is basically saying. All right, so I hope that makes sense. So now, who should DCA? Who are the persons that need to do this? Okay, so DCA can be used by investors or traders with any experience level in the game. Okay, with any experience level, so it doesn't matter. Okay, so be you with a beginner, intermediate, or advanced trading skill, you can use DCA strategy because it reduces the risk of entering the market at the wrong time. Yeah, it reduces the risk of entering the market at the wrong time. Now you see this place. No matter how good you are in the crypto market, it is difficult. It is difficult to time the market. Yes, I must tell you this. It is very, very difficult to time the market. Okay, so no matter how professional you may be, no matter how many years of experience you are having, or how many years of experience you are in the crypto industry, it is very, very difficult to time the market. That is why you see some persons when they buy a particular coin, they set they set to buy at when the coin dips, or they set to add to their position when they see that the market is going up. Okay, so all is just part of DCA. Now the benefit of using DCA: one, it reduces risk reduction. Okay, so when you are using DCA, it tends to reduce your risk. Okay, it gives an edge over bad timing of the market. What I just said, it enables you to ride out a declining market. Okay, so what this means is when the market is on a downtrend, using DCA can help you to ride out that downtrend. Okay, let's say you are using DCA, then the market is at $10. You bought first at $10, then the market is going down. You buy again at $8. It's still going down. You buy at $5. So that is what this particular point is talking about. Okay. So lastly, it gives you lower cost. Okay, buying at the lower at a lower price. Okay, so it's just same thing as what I just explained. So please, you need to know this. DCA does not completely remove the risk. It doesn't guarantee you a successful investment. We all have to know this. Using DCA doesn't mean the investment is going to be successful. It doesn't mean that the risk attached to every investment is taken out. No, that is why I said the benefit of using DCA, it reduces risk. I did not say it removes the risk. All right. So DCA is mostly effective in a bear market. In a bear market, in the sense that when the market is declining, okay, so it's mostly effective in a bear market. It gives you the most gain when you are using it in a bear market, and it is good for long-term investors. Let's say you are thinking that you are going to hold this bag, you are going to hold this coin for like 2 years, 3 years, or you are saying this coin is currently at $1. It's trading between 50 cents to $1, and your target for this particular token it's $10. So you can be DCAing. Okay, you can be buying because your target is at $10, which makes you a long-term investors. Okay, so but you can also use DCA as a trader when you want to buy the dip. Okay, so if you have been trading, buying the dip should not be strange to you, because almost all traders know how to buy the dip. Now, this is the example of DCA. Okay, so I'm using DOT as an example because I so much believe in this particular project. Okay, so I got into this project as should I say early or late? Okay, at about $25 to $30. Okay, so as I'm still holding this project. So now assume you want to invest $2,000 on DOT. Okay, with I'll take that again. Assume you want to invest $2,000 on DOT with a current price of $45, and you are concerned about the current price. Okay, so you are concerned not to buy at the top. You don't know if it's at the top. Or let's say you are a trader with same worth of dollars. Yes, talking about the $2,000. Okay, but feels it may retrace. You want to buy, as a trader, you want to buy DOT, and you're having $2,000. You feel it may retrace due to your analysis. So this is how DCA works. You can divide this dollar amount into 4 parts. Okay, you can divide it into 4 parts. Okay, so next slide say $500 each, and set an interval for the purchase. Okay, so now you have $2,000 Now you have $2,000 and you want to buy DOT. You are worried not to buy at the top, or you feel that the market is going to dip, but you want to DCA. So this is what you should do. Divide this $2,000 into 4 parts. Okay, divide this $2,000 into 4 parts. Okay, and when you do that, it will give you $500 each. Okay, so now you have $500 each. Set an interval at which you want to buy that DOT. Okay, let's say you are using weekly. So this means if you are buying so it will be 2000. Okay, wow, this is bad. 2000 divided by 500, we have 4. Okay, which means you are going to buy DOTs in 4 weeks. You are going to be buying DOTs for 4 weeks, 500 each. Okay, so let's proceed. Now at $45, the current price is at $45. You made your first buy. Okay, so next week you make another buy, which is your second buy. Then the price is at now $35. So the third week you make another buy, and the price of DOT is at $38. And the final week, which is the fourth week, you make the last buy with $500 as well, and the price was at $30. Now you have 4 different entries. Okay, because you bought first at $45. Okay, then you buy again at $35. You buy again at $38. You buy again at $30. So now you have 4 different entries. To get the average entries, okay, so in order for you to get this, you sum up the total entry and divide by the number of entries. Okay, so sum up the total entry and divide by the number of entry, which is 45 plus 35, which is your week 2 buy, plus 38, which is week 3 buy, and 30, which is your week 4 buy. Now you have 148. Then you divide by 4. What you have $37. So what this $37 is telling you about, let's see, the average entry price is now $37. Okay, so this is trying to tell you that the price at which you bought at 45 at the first week, bought at 35 at the second week, all of that do not matter now. Okay, what really matters now is at the end of the 2000, at the end of at the end of investing the $2,000, your average price, or your average entry price or buy price, is now $37. Okay, so when DOT gets to $37, it means you are without loss. Okay, except for the charge fee in buying. Okay, it means you are without loss. So remember that the price of a crypto asset is not stable. It goes like this. Okay, so it's not stable. Okay, so when the price of DOT get to $37, it means you are without loss. So I can call this your break even. All right, so by the time it gets to $45, which was your first buy, you are already in 25% profits. All right, so what this is trying to tell you is this: instead of buying the instead of using the whole $2,000 at instead of buying DOT at $45 with the whole $2,000, you decided to use DCA method. Okay, you decided to share the $2,000 into 4 and buy at a weekly interval each. Okay, so now this has given you an edge, because if you have bought at everything at $45, you will be waiting for the price to exceed $45, let's say to $50 or to $60 before you start making profits. But now with the help of DCA, you are able to buy the dip, and you're able to make profits on time. Okay, so now you know what DCA is all about and how you can use it as an edge in the crypto industry. All right, guys. So this will be the end. This is the end of this particular video, and I hope it makes sense to you. So if it do make sense to you, do not forget to subscribe. Do not forget to leave a comment if you have any question. Do not forget to share with your friends. Okay, and also you can follow me on Twitter. Okay, I give tips on crypto. I talk about crypto a lot, so you can follow me. You can see and read about things that I talk about. So thank you guys for watching this particular video.